we had heard some mumblings from some of the members of the Senate that they thought the session was too fast and too quick this year, and we hadn't seen each other enough lately, and they wanted to get back together for another issue. So we decided to have a hearing where we could come back down to the Capitol on a session that seems to never want to end. But this is a subject that the Lieutenant Governor wanted us to discuss. We had legislation before us during the session and that deals with the wind pool and surplus lines and non-admitted policy fees, and we have a repealer in the non-admitted policy fee legislation that we will be dealing with this term. And it's very important to the Lieutenant Governor that we discuss it, and we have a field of experts today, some who are around, helped form the wind pool. We have people here today that are going to talk about administering the wind pool, how the wind pool is funded, discuss the non-admitted policy fees, and then we have insurance providers who are charged with insuring our Mississippians in the wind pool area. So the first person I'd like to call on today is our friend Tom Quaka. Tom lives in Ridgeland. He's a friend of Lieutenant Governor's and mine, and more important than a friend, he's being a friend for us today. He's an expert in the insurance field. He served over 52 years in the insurance business, most recently with FCCI Insurance Company, but before that, he owned two Mississippi-based insurance companies, and he was very active in the insurance business when Hurricane Katrina hit, and is very knowledgeable on surplus lines, as well as non-admitted policy fees and a wind pool. So Tom, if you would come please to microphone over here. And I want to mention that we have 5 speakers today. We're going to try to keep it to about 15 minutes per speaker and have an opportunity to ask each speaker some questions. And then at the end, if one of the speakers hit on a subject that you'd like to ask them another question, we'll have time left over to be able to have them back up there. And I'm going to keep a little running total, and I'll let you know when you got about 2 minutes left on your 15 minutes, just so you can kind of wrap it up where we can ask some questions. So,
Mr. Chairman, thank you so much. And committee members, thank you for allowing me to be here today. I have a topic matter that really has to go back a little bit in history, if I may, to where we are today with the Surplus Lines Association, the surplus lines fees, and the windstorm pool, MWA. The good news about being in the business 52 years, if there is any good news about that, is that I was actually present for Camille and was down there 2 days after that storm hit. Well, it was obvious what it did to Mississippi, what it did to the community, what it did to the culture, what it did to the infrastructure. And there was going to have to be something done to create an interest in insuring the coast. You know, we've always talked to our reinsurers about the fact that Mississippi is like a bowling alley. If we get a hurricane, it's not a spare, it's a strike. And because of that, the significant impact on our state is immeasurable in many ways. If you'll recall, 1969, Camille brought on a lot of controversy, a lot of litigation, and a lot of interest in the state as how we would continue our economic base. 2 years later, they formed, or the state formed, the legislature formed the Mississippi Insurance Underwriting Association. That association was made up of company personnel, and it was based purely on company assessments. There was no funding involved by the state. The insurance companies funded that organization and were assessed on an annual basis, and if there wasn't a storm, then there was a return of that assessment. So there's a 3-year running average of debits and credits along with the association. In 1987, the legislature adopted the MWUA, which is really the current version, if you will, of what we have today. During that time, I will tell you that before the last event, Katrina, we, in a group of investors in Mississippi, many of those people that you know, formed a domestic insurance company. Now, a domestic insurance company means a company that is formed in Mississippi, regulated by Mississippi, and generally insures only those perils and risks within the state itself. You know, our commitment to Mississippi was sort of like the commitment of the pig versus the chicken to breakfast. We were either going to lose it all or we were going to make money in Mississippi. As it turned out, we created Briarfield Insurance Company, which is a Mississippi domestic insurance company. We put $5 million into that company and very judiciously bought reinsurance on something called a quota share basis, meaning that we ceded out 80% of our liabilities and about 50% of our premiums. And we did that because we knew we did not have the surplus standing to withstand a Mississippi storm. Two things that we did not do. Number one is we did not write personal lines because we did not have spread of risk. Two, we did not write on the Mississippi Gulf Coast because we believed those windstorm exposures were too great. When Katrina hit, our losses, even though we did not write on the coast, even though we did not write personal lines, were 3 times our surplus. Now, the good news is we had ceded off most of that liability and we were able to stay in business. There were domestic companies who were operating then in the state who are not here today because of that storm. So what had to happen is 3 things. Number one is we had to figure out a way to get Mississippi insureds insured, where mom and dad could buy homeowners policy and have windstorm in Pascagoula or Gulfport or any place in between. We had to assure the insurance companies that they would not be at risk of financial destruction. Well, how do you do that? Well, the first thing you do is you set a cap on your losses. Okay, Mr. Insurance Company, you can only lose 10% of your surplus, and after that, we'll assess the policyholders or the state of Mississippi. With that cap, the insurance companies were able to put together reinsurance. You know, the thing about it is, if you don't know what when you walk in a room and you don't know what your liabilities are ever going to be, how do you attract capital? You know, how are you going to get somebody to invest in something that really becomes gambling and not insurance? Well, what happened is that all these folks got together, people like Dean Kirby, who was chair, Mark Formby, who was chair, Commissioner Dale, Deputy Commissioner Harrell, and a lot of the business community as well as the insurance companies got together on an even playing field and said, we have to solve the problem of getting the Mississippi policyholder affordable insurance, number one. Number two is we have to protect those who are providing that coverage. It cannot be a gamble. There must be some limitation to as what their liability is. And three, how do we maintain the stability enough to bring insurance companies into the state and attract insurance companies when in reality they are withdrawing? If you have any sense of value, if you're a national insurance carrier, you know that Mississippi represents 0.6% of all the insurance premium written in the United States. Think for a second, how important does that make you? How important does that make us as a marketplace? That coupled with substantial amounts of litigation created some bad will among the national carriers. We had to fix that. These people came to the table, created what is now called the Mississippi Windstorm Underwriting Association, MWUA. That MWUA was put together with private and public funds, almost $200 million of Mississippi money, state money as well as federal money, went into the operation of that organization. The good news is that organization has been financially successful ever since. Why? Because there has not been that big storm. We have not had the Katrina that other states have had over recent years. The good news further is up until this year, the reinsurance market was competitive. And we were able to buy competitive reinsurance with a growing premium base, hoping to reduce expenses. Made investments over, you know what the stock market has done over the last several years, and those investments have certainly benefited the Mississippi policyholder to the extent now that with that borrowed money of 15 years ago, the surplus now within the organization is approaching $300 million. That $300 million, I believe, Joe, who will cover this later, is now covering about 8,000 policyholders. Is that correct? 15,000. All right, well, if you divide that into 300,000, what do you get? You get about $17,000 for policyholders if you do the math. So, you know, there's some significant surplus. With that said, a few years later, the non-admitted market became involved in the windstorm, not by choice, but by action. I've got to tell you, I think it's important that everybody understands the difference between an admitted carrier and a non-admitted carrier. I spent my entire life dealing with admitted carrier, meaning that I had somebody to supervise my actions. I had oversight. I had people approve my rates. I had people approve my forms. And if one of my consumers didn't like what I did, that consumer had the right to either complain to me about it or through the Department of Insurance. So I'm a firm believer in regulation in the insurance business to the greatest extent. We could probably discuss that at a different time. However, non-admitted carriers don't have a mama to report to. Non-admitted carriers have their own policy form. They make up their own rates. They are not regulated by the state. And quite frankly, if you chose as a consumer to pursue litigation against them, you would have to be dealing in a federal court environment as opposed to a state court environment with your state regulated insurance carriers. But because of that, there was legislation a few years ago, several years ago, that created the fee generated of 5% extra on a non-admitted policy to come to the windstorm pool to help offset its expenses, add to its surplus, provide not only coverage but potential mitigation efforts as well. That 5% was on property. It was very complicated. It was decided by the department that we would uncomplicate it, and we put 3% on all lines rather than just property lines. Well, that's kind of good news, bad news. You know, if you're a hospital in Tupelo and you've got a non-admitted carrier, you're paying 3% on all of your lines, whether it's liability, whether it's property, directors and officers liability, umbrella, or anything else other than workers' compensation. So that 3% was created to offset, add to the value of the windstorm. And recently, through some legislative matters, some of that money has been directed otherwise. So, Mr. Chairman, that's pretty much how we got to where we are today, and I believe that Joe is going to pick it up pretty much where I left off. If that's not correct, Joe, let me know. So.
Thank you. I do have one question I want to ask, and excellent job on staying within your 15 minutes. Thank you. On the non-admitted policy fee, which started out that it should be a minimum policy fee of 5%, at that time, how long was that anticipated that that would be in place? Because it was reduced a few years later to just 3%.
Well, there was a repealer on all of that, so it was never ever intended to be forever, just like a lot of legislation is not intended to be forever. But what you also have to understand is the non-admitted environment, and you're going to see that I'm not exactly a fan. But in the non-admitted environment, the insurance company is not paying that fee. You know, in an admitted market, if I am assessed, I'm paying it out of my surplus, right? Non-admitted market, those people are saying, okay, Mr. Insured, add 5 points to that policy, and that's a straight through, pass through to the state. All right, the insurance company doesn't pay taxes. They don't pay taxes via, or they, excuse me, that's the wrong word. They do pay taxes, they don't pay fees. That's via a different mechanism. They all pay a 4% non-admitted fee. But that also comes directly from the policyholder, not from the insurer.
Okay, committee members, any questions? That non-admitted policy fee is coming up for sunset in about 2 years, and decision we'll be making on how we want to handle that fee. That's why one of the reasons we're here today. Now, Mr. Joe Shoemaker is going to go a little for y'all. Anybody have a question from Mr. Quacker, or we'll go to Mr. Shoemaker? Then if you want to come back later and ask a question, you're welcome to. Okay, Senator Kirby?
Thank you, Mr. Chairman. Not a question, and you've done a very good job of explaining it. But the one thing you didn't say that I think the committee needs to know, I had more than one company tell me after Katrina, at the current rates that they were being charged, that it would take them, from their loss of Katrina, 60 years to get back what they lost. And I think a lot of people need to know that. They're thinking insurance companies are making all this money, and it'll take but one loss, and you're out 60 years before you get it back, before you get back to where you were.
And that's what makes it so much more difficult for a domestic insurance company who's only writing in a state, because you could operate for 6,000 years and not get it back. Thank you.
Thank you so much, Tom. Okay, we have Joe Shoemaker as the pool manager with the Mississippi Windstorm Underwriting Association. He's going to talk about our wind pool board.
Thank you, Mr. Chairman and members of the committee, and Tom for really laying the groundwork. And I promised I'm going to try to stay, and do give me a little bit of a heads up. I brought you a lot of material. I think she's handing out now, because I think there's a lot of information about our organization that needs to be said. But thanks to the excellent job that Tom done, I think I'm going to be able to skip through a fair amount of it, especially when it comes to the beginning of it. I do want to just kind of share that we're not alone. Mississippi is not the only one that goes through this. I mean, there are pools around the country, for the lack of a better sense. There are basically 2 types of pools. We throw them in 2 buckets, fair plans and beach plans. Fair plans, as you can see, is basically was a fair access to insurance requirement. It was something that started by the federal government in the 1960s, and then beach plans started shortly thereafter. Really without any federal involvement, but it was due to the wind and hurricane exposure that happened around the country. These started happening. You can see some of the states that have these beach plans. They were set up, like I said, set up shortly thereafter, and they're scattered. I will say this is accurate to my knowledge, with the exception of Arkansas should be included here, but otherwise there's 34 states that have residual property pools. Now, we know there's many types of pools, but we're talking residual property pools. And for the most part, these pools exist for residential properties, and they're scattered around the country. If you're looking for a safe place to maybe go in our country, that insurance is great and hazards and risks are low, kind of stands out, maybe the Midwest, and in the West may be the place we want to go. The air's thin, and the insurance is maybe available. But there's 36 plans nationwide. I listed a few of those that are around the East Coast and the Gulf Coast, just kind of tell you where they stand. Certainly Florida is, the entire state of Florida is a wind exposure. And they're the elephant in every room that we walk in every time we have meetings with all of us pools. Florida certainly is the elephant of the room. But surprisingly enough, you may be surprised to see that Massachusetts, North Carolina, my good friend in North Carolina, Gina, she was doing pretty good, had about $1.7 billion worth of reserves until Florence came through. Now she's at 0, except what she's built back since. But they come in all different sizes, and not to rehash what Tom has also covered, the first plan in Mississippi was after Camille. That was in 1972, and it was the MIUA. The only thing I would add, I don't remember if Tom pointed out, we wrote both fire and wind in the original MIUA. So it was just a regular kind of a standard dwelling policy. It wasn't a homeowner's, no liability, but we did write fire and wind in that first pool. I will expand just a little bit on the administration. I know that the Mississippi State Rating Bureau, we refer to it as MSRB, began operating in MIUA when it was created in 1972. Some of you may or may not be familiar with what the Rating Bureau is. The Rating Bureau is also a statutory created entity. We're a nonprofit private corporation. We're there to service and provide services to the insurance industry. And when I say insurance industry, I'm really referring to the admitted carriers that we talked about earlier. Admitted meaning not the surplus lines, as Tom so, thoroughly explained the difference between the admitted and the surplus lines. I would only add one comment that the admitted carriers are backed by the Guarantee Association. Surplus lines are not. If something happens to an admitted carrier, if they go out, then there's a Guarantee Association that can pick it up and fund it. But the Bureau is funded by these same carriers, admitted carriers, and we do a lot of different things. There's over 700 of those in our state. We also do a lot of other duties. We do property surveys, fire sprinkler reviews. One of the more popular things or more known, widespread known things that we do is evaluate fire departments and fire protection facilities throughout the state. I was fortunate enough in my 41 years with this organization to spend 18 of them going around looking at fire departments and evaluating them, meeting with mayors, board of aldermen, board of supervisors, and evaluating that fire protection. It's a very critical part. We have 787 fire districts and cities that are graded and have achieved lower classifications because of what they've done to improve their fire services. But we also do code enforcement evaluation, and that's especially important to this wind pool. If any of you have constituents on the coast, the wind pool chose several years ago to give some significant credits if you built your home in a jurisdiction that was properly enforcing modern building codes. And we at the Rating Bureau go and we go in and we look at the codes they have adopted, the process, the procedure that they have for enforcing those codes, and we establish a classification which gives them some significant credits on their premium in this wind pool if they built their home to a modern, well-mitigated code. We're big supporters of code enforcement. We're big supporters of wind mitigation. The wind pool gives really heavy credits if you have done something to strengthen your home. And the rates and the premiums is really a lot of impact is left up to the individual homeowner for the steps that they might take to mitigate the risk of wind to their home. MW created, much as Mr. Qualka has said, it was created in 1987. It was still funded by the licensed carriers up until the time of HB 1500 after Katrina, and explained very thoroughly the need, why something had to be done. It wasn't about just a coastal insurance problem, it was about a statewide insurance problem. Everyone was feeling the pain. But we assessed those carriers $545 million. We sustained $720 million worth of losses. And we assessed that we had $175 million worth of reinsurance. Thought we had enough, but we were well short, 545 million short. And that pain was spread throughout all of the admitted carriers. The surplus lines weren't involved. It was just the admitted carriers or the licensed carriers that paid that freight. This is our mission. Each of you have a copy of this. I'm going to kind of, for time's sake, I'm going to skip over that a minute. Happy to answer questions if you see it. I do want to soak just a little bit on this. You know, I've heard it put before that Katrina can run into, we can all suffer a little bit from Katrina amnesia. You know, summer times like this, and in particular as I was starting to put some of this together the other day, and that bottom left picture you see looked awful familiar as I was looking at the Weather Channel, and Hurricane Laura was headed up through the Gulf Coast, and might have even, it was going to be interesting to see how we had two storms side by side on the satellite. But those other pictures, you know, lest we forget the damage and the suffering that took place on our coast from a storm like Katrina. Will it ever happen again? I proclaim that it's not if, but it's a matter of when. And Tom, I really like your analogy about the bowling alley, because it's all hit or miss. And I'm gonna show you that in just a moment. Few statistics, same things that we talked, we had 16,000 policies at the time of Katrina. We had 1.8 billion worth of insurance in force at the time of Katrina. We paid $720 million worth of losses on that storm. The annual premium at the time of Katrina was $12 million a year. And Senator Kirby, going back to your analysis, I'm not an actuary, but if I took 12 million divided by 720, I believe that's about 60 years of every dollar that came in the door left in probably 6 hours. So it can be massive. We are a hit and miss type of plan, and we've been there. Everyone felt the pain, and I think we've done a good job about that. From the big carriers, some carriers chose to write business and write that coastal exposure, and we applaud them for that, because that's what we all want, is a voluntary market to return and give citizens competitive, good insurance. The wind pool, as all residual pools, we are oftentimes referred to as a market of last resort. We're here to fill a void. When the voluntary market, whether admitted or non-admitted, doesn't want this risk for whatever reason, then we're here to fill that void and try to provide the homeowners and the property owners some insurance that we know they have to have in order to survive, in order to thrive, in order to get a mortgage or even survive at all. We can some say we're in the insurance business, we can say what a great, and it is a great industry. But you know, it's also kind of, when we go to buy it, I don't know, I heard a guy explain, said, you know, he was an insurance salesman. He says, I've never had a customer that tells their wife, baby, tomorrow morning we're gonna get up and get to go buy some insurance. I can't sleep tonight, can't wait till we get to go buy insurance. But we all buy it because we need it, and it's an essential service. But this is just a quick example. You can see where, and I didn't name it, these are real examples, and Tom's former company would be similar to this. 2.3% of the statewide market share, they paid $42.4 million. Now, that was a company that didn't write any coastal, but they paid high assessments. Company XYZ had a bigger market share in our state, but they also wrote coastal, so they were able to lower their assessments. But I can tell you, the pain they felt from paying their own losses on that business that they wrote was severe. So it confirmed the fact that it's not just a coastal problem after Katrina, it was a statewide problem. Not like any good catastrophe, what happens? A lot of litigation to follow, right? And there was plenty of litigation. I don't have to tell you, if you've lived in Mississippi, if you heard anything, you ever turned the news on, you know that lawsuits were prevalent after any major storm, and the Katrina was no different. We had 18,154 claims, and if you're looking at the numbers, you say, well, how'd you have that many claims when you didn't have that many policies? Well, some policies had more than one property on that policy, so you can have more actual claims than you actually have policies. I didn't want to mislead you there, but actually the Wind Pool Board got sued. They got sued by member companies, and they were sued over what was portrayed to be insufficient reinsurance, that they didn't buy enough. Why didn't they buy enough reinsurance? That got dismissed in court, but not until after we incurred almost $6 million worth of lawsuits, our legal expenses, defending that. We also, the process, there was a lot of pain. And how do you divide that $545 million pie up among 600 companies? There was pain and heartache with that. Lawsuits and challenges went on for years, well over 10 years after Katrina. We were still looking and settling some of those issues around those assessments. It was painful in a lot of different ways. I couldn't leave this out. I ran across this. I stole this, I think, maybe back from Governor Barber at the time, or maybe, and I've just lost his name, that does the cartoons in the paper. But anyway, it was easily to see that companies were ready to evacuate our state. And as Tom pointed out, when you have 0.6% of the nationwide market, you don't have a lot of clout and leverage to try to convince them to stay. But they did start to leave. You know, hopefully we have learned from every lesson. I was involved. I first started becoming involved with this pool. I joined the organization 41 years ago. In 1998, I became affiliated with these two. We run two pools. There's another one, by the way, the Mississippi Residential Property, which we also manage. But in 1998, my very first year, we had a storm, Hurricane George. Y'all may remember that. Did $28 million worth of damage to our Gulf Coast. I thought, man, this is bad. First year, rookie guy this, and now I got to face a storm. Little did I know what would happen a few years later with Katrina, and the magnitude of what would happen. But the board that runs this organization is always looking for ways. How can we make it better? What did we learn? All right, I'm going to skip very quickly. These are numbers, these charts are numbers that show you where we've gone as far as our growth, that we went up and where we've come down. Policy count, where we've gone up, where we've come down. We have never paid or had a formal depopulation plan, but yet we've done everything to get out of the way and let the voluntary market come back. And that's what we should do. And because when they take it, we want it to stay out. We don't want them to buy it out for 1 year and then come back. I do think it's important, real quick, for you to know who is in this wind pool. 98% of our policies are residential. Those are Mississippi coastal residents, 98%. 50% of those are in Harrison County. Another 35 over Jackson County. Okay, 85% in those two counties, residential. 75% of them are properties located below I-10. So you're talking about where are the pins located in that bowling alley that Tom referred? They're sitting in Harrison County, Jackson County, below the interstate. If that tells you where the strike could occur. We do still purchase reinsurance. We have purchased reinsurance. Reinsurance is essential. I won't talk much on that other than the fact that why are we buying reinsurance? And up until 2020, from the time of HB 1500 to this particular year, if we ran out of funds and ran out of insurance, then it meant surcharges on every policyholder's property and casualty throughout the entire state. Every auto and home policy in the state, we're going to be paying surcharges. Now, since HB 444 in 2020, there's a $165 million layer right now for a single event that I do want to skip over real quick, if I might, Mr. Chairman. This is the funding charts. Tom's mentioned it. Happy to explain that later. This is where our funds have come from throughout the past. This one, if you've been curious about your non-admitted fees, the history, that where it's come from, when it started, what it was applied to, the ups and downs, you can see that it's been a little volatile over its history, but that's a chart that can show you where those funds have been collected. Thinking about rates, right after Katrina, we filed for a 398% rate increase. $12 million a year couldn't cover $720 million worth of losses, quite frankly. So, but with some funding from the federal government and federal subsidies, we were able to get that down to 90 with the commissioner's office. And then I think stability is more important than anything. We haven't had one since 13. I will tell you this, in complete disclosure, the board, we are looking and preparing a filing now to take over to the department for some rate implication. I do want to skip through. This is, I would encourage you to read it. I do want to share the board in, let me back up for just a moment. I think Tom has covered who our board members are, but we have a board of directors that work many, many hours. This is a working board. They aren't compensated a dime for serving on this board. Many of them leave their own personal businesses if they're an independent agent, and they come and spend time doing service to this board in this organization, and it costs them money. We do reimburse them for expenses, but I just want to applaud the board that serves, and it's a joint effort, which I think has done an excellent job throughout the years. I want to get down to this one last chart, and then I'm going to quit. This is something I tried to throw together to help you understand, should Laura or the next storm or Katrina 2 or whatever storm comes through, or multiple storms, because it can be more than one, hit our coast, this is the funding mechanism that we'll go through. Of course, we take care of the first $25 million, and currently for this year we have $25 million worth of reinsurance. Then we cover the next 50. Then we have $500 million worth of reinsurance, And then we would take the remains of our surplus of 170 million, and then we run out of our surplus and reinsurance and et cetera around the 770 million mark. Then we would assess the carriers as outlined in HB 444, 6% of last year's limits, which currently would be $165 million. So that moves that bar on up to 935, and at that point, we're completely broke. We've gotten all we can from the carriers. We're going to have to issue bonds. Those bonds are going to be paid back by surcharges on all the people throughout the state of Mississippi. That's very brief and as fast as I could almost say it. I hope I've
Excellent presentation. Thank you so much. Committee members, any questions? Mr. Shoemaker? Yes, sir, Senator Horn.
Thank you, Mr. Chairman. Mr. Shoemaker, can you tell me what the average residential property owner pays as it relates to the insurance?
doing some math. We have 14,000. I think our average policy is about $150,000 on an average value. It would be somewhere around probably $1,800, $2,000 for that policy. Again, it depends on when the home was built, because we can give like 15 and 20% credit if it was built in a code, in a B code, BKEGS, or a code enforced jurisdiction. Depends on the type of construction. If they've achieved any other mitigation credits, they can get that down. And deductibles, the deductibles that they choose can vary and knock those numbers down. But on an average, they pay about $1.30 per 100, and our average policy is about $150,000. So that would equate to about $1,800, $2,000 policy.
And what is your assessment of the healthiness of the wind pool fund?
I'm sorry.
What is your assessment of how healthy the wind pool fund is?
Well, from me knowing and able to meet and collaborate with all of my colleagues around the country, I can tell you we're in an envious position at being as well-funded and well-positioned with the reserves that we have and the reinsurance that we have. We've been fortunate when, if we were at our peak, back when we had 46,000 policies and $7 billion, we didn't have any more money than we do now. We're fortunate that a lot of those policies have left and went to the other markets. That means it puts us in a better position because we have similar resources with less people that we're protecting. But that's what we want.
Now, you said that a lot of policies have migrated over into other coverage?
Yes, sir. Yes, sir. Most of our policies that we see leave, most of them are going to the non-admitted markets, I can tell you that. I don't know, I can't monitor if they just don't renew a policy, but if they cancel, we can monitor that. Lloyd's was taking a lot of policies out of our pool. Now, I will tell you this, based on the market conditions that are happening in that market, it would not, and what I'm hearing from agents and people on the ground that send business to us, expect that to slow, if not stop, because those prices are going up, which means they may be coming back to us, if that makes it.
Okay, and one final question. So besides keeping the program authorized, is there any other ask that you have of the legislature regarding the wind pool?
No, sir. I honestly think that with our current structure, with our current board, and with our current resources, I feel very comfortable where we are and in the position that we're in. And while none of us are looking forward to that next storm, I think we're in a good position to be prepared for it.
Thank you, Mr. Shoemaker. Thank you, Mr. Chairman.
Thank you so much, Joe. Appreciate your knowledge. Okay, next we're blessed to have insurance providers to speak to us. State Farm specifically, a company that was writing policies on the coast in the wind pool area before Hurricane Katrina and after Hurricane Katrina, to speak to the effects of the importance of our wind pool. John Lancaster is a friend of mine and a neighbor in Ridgeland, and he's with Vice President of Agency Sales for State Farm here in their Mississippi office. And with him, sitting down over there, is Mark Dilkin from their Atlanta office. thank you so much, Mark, for coming so far, and John, for giving us your time today.
Thank you, and Lieutenant Governor, Mr. Chairman, and members of the committee, good afternoon. My name is Walter says, it's John Lancaster. I'm Vice President of the agency for State Farm Insurance Company. I've been in Mississippi now for 8 years, and I'm proud to serve and honored to serve and lead a group of agents of 230 Mississippi agents and who have about 830 employees under their employment. State Farm has approximately 1,090 agents, team members, and employees in the state of Mississippi. That includes claims personnel as well. We have approximately 528,000 auto policies, 253,000 residential and commercial policies in the state, and we're the largest property and casualty insurer in the state of Mississippi. State Farm pays about $27 million in premium taxes per year, and we have over $500 million in municipal bonds in Mississippi. What I'm trying to say, Mississippi is very important to State Farm Insurance. I'm here along with, as mentioned, Council Mark Tilkin to discuss the importance of the Mississippi Wind Pool, and not only to insurers of the state, but also to property owners, quite frankly, as it's been mentioned earlier today, throughout the state of Mississippi. In 1992, Hurricane Andrew struck Florida. It was really an event that changed the industry, and really it changed our views as insurance companies of how we view storms, and especially risk on the coast. The damage from Andrew was so devastating that it not only threatened the property values and property down on the coast of Florida, but it also had an impact on the property market throughout the entire country. For example, State Farm Fire and Casualty, which was the largest provider of homeowners insurance at the time, would become insolvent if it wasn't for State Farm Mutual Automobile Insurance Company putting in an infusion of capital to bail out the company, a fire company. As we all know, Mississippi is not immune to the devastation of hurricanes. Obviously, we know about Camille, and we know about Katrina. As a result of numerous hurricanes which caused significant damage to coastal areas, many property and casualty insurers have stopped writing policies on the coast as it deemed to be too risky. As a result, wind pools are formed in many of the coastal states, and these wind pools were set up to be insurers of last resort, to be used when property owners cannot find adequate coverage for their coastal properties. The Wind Pool of Mississippi was formed in an effort to provide wind and hail coverage for the most vulnerable areas in Mississippi, namely the coastal areas, which consist of the counties of Hancock, Harrison, Jackson, Pearl River, Stone, and George counties. These areas are some of the most vulnerable areas in the country when it comes to hurricanes, and we saw that with Katrina. The Wind Pool operates like any other insurance company. They offer insurance properties on the coast. The rates could be charged adequate to cover the associated risk and association fees of those properties. They collect premiums, which are used to pay claims, fund the association's expenses, and with enough set aside to the infrequent but often losses that result from a major hurricane. Luckily, hurricanes don't come along every year, but as we all know, when they do, they cause severe damage and enormous insured loss. To help deal with these events, the Wind Pool also purchases reinsurance, just like other insurers, in the event the storm has the large and results in large covered losses. In the event of the losses are more than the surplus, the available reinsurance, there's an assessment mechanism, which was talked about earlier, which would assess all admitted insurance carriers that sell property insurance. Because non-admitted carriers are not subject to assessments, there's a 3% non-admitted policy fee that is paid to the association. These funds go to the operation and surplus of the Wind Pool, the insurers, the participation from both admitted and non-admitted carriers in helping to deal with the aftermath of a major event like a Hurricane Katrina or Camille. It's very important that the Wind Pool have the ability to function like a private insurer and accumulate the necessary resources to meet the obligations. They can do this with a combination of accumulation of capital, referred to as surplus, along with adequate reinsurance to deal with the inevitable storm. If they don't, then admitted insurers will be assessed, and the possibility exists that policyholders throughout the entire state of Mississippi would end up paying a surcharge to cover the cost of claims. This surcharge would come at a time when the company or the economy would be recovering from a pretty devastating event. You and your constituents would see the cost of surcharge on individual homeowners or property insurance bill, as it was mentioned earlier as well. State Farm supports the Mississippi Wind Pool. The association ensures that there's adequate coverage, not on the coast, adequate coverage on the coast. Without the Wind Pool, we would not see the adequate access to insurance for coastal properties. which from an economic standpoint would impact the whole state of Mississippi. So with that, again, thank you, Mr. Chairman. Thank you for committee for giving me this time today to talk about this important topic of the Mississippi wind pool.
Mark, want to say anything to us?
Excuse me? Yeah.
Hey, committee? Senator Horn?
Thank you, Mr. Chairman. Mr. Lancaster, in your introductory remarks, you mentioned that you have a 20-some-odd billion presence with municipal bonds in the state. So are you an investor in those municipal bonds? State Farm an investor in those municipal bonds? Or does State Farm have an appetite to increase its investment in those municipal bonds?
We can always look at that. You bet.
Is that a yes?
We can always look into it.
You can always, you should have been a politician.
It's actually about $500 million in municipal bonds, 27 million.
Nationwide,
No, in Mississippi,
$500 million?
500 and some $1 million.
Thank you, Mr. Chairman.
Senator Delano?
Thank you. Can you give me some insight in how many policies State Farm had in force and effect before Katrina, and where are you today?
What we have right now,
And I would like to, I'm sorry, I would like to ask that for the 3 coastal counties, if you have that, and if
I don't have that
breakdown.
I know we have 25%, over 25% of the market share in homeowners right now, 23.5% of the automobile market share right now. But that's something we could follow up on. Do you know the exact amount?
We do have quite a number of policies in the 6 coastal counties. With the antitrust concerns, we usually don't talk about the individual numbers. I'm happy to stay after and let you know what they are. However, we are, I think, a pretty big writer of policies on the coast, including with wind. So we have a number of policies without wind, but we also have a number of policies with wind.
And then, do you have a subsidiary or another plan that is in surplus lines plan that's outside of State Farm?
There's a company called Dover Bay, which is a surplus lines carrier. I am not sure of the market penetration in Mississippi.
No, we don't offer that product yet. I know we offer it in Alabama and we offer it over in Louisiana, but we're contemplating, we're looking at the market right now.
And those are wind storm policies?
Excess and surplus policies, yes.
Okay,
Yes.
all right. I just want to tell you, as a representative for South Mississippi, and I know I'll speak for our other guys down here as well, we like to have you back writing policies on the coast, including wind, and then you've been a very strong partner in trying to help us stabilize our market and our rates down on the coast, so I want to thank you for that.
Thank you. And we continue to write, policies in certain areas and evaluate the market yearly. Thank you.
Victor Hill?
Also, thank you for saying 6 coastal counties. I live in Pearl River, and my rates are what they were prior to Katrina for the same house. So my question would be, what percentage or if any, have policy rates decreased either in 3 bottom coastal or the 3 top coastal counties since that initial, hit happened?
Yeah, we have had a string of rate decreases over the last several years. And what we do, we look at certain areas, and what we look at when we look in an area, we look at potential, obviously water surge and then wind and how that will affect that particular area. And as I mentioned in my remarks, those 6 counties, and you all know this, are prone to some pretty significant damage. We saw that with Katrina. But we've had probably 3 rounds of decreases within the last 3 years. I don't know the total amount on top of my head right now, but we filed with the department and had approved by the department. I'd have to go look, Mark. I don't know if you.
I don't,
I know that on the Alabama side, which I have responsibility over in Alabama as well, we've had a lot of luck builders building fortified homes. And we were starting to have more of that over in Mississippi. And as we look at that, that provides us pretty good savings to insureds. Right.
Other questions? Thank you, State Farm. John, Mark, for being with us today. Thank you so much for your knowledge on the subject and for your commitment to Mississippi. Okay, one of the items that was responsible for precipitating this hearing is a bill that the House sent to us this year. House Bill 682, I believe it was, and it came to the Senate, and we didn't pass their version, and we invited conference, and the bill died in conference. But the gist of the bill was the diversion of the non-admitted policy fees. Roughly $13 to $15 million a year. That 3% fee on non-admitted policy fees results in about $13 to $15 million a year. And the House bill would have diverted 40% of those fees, roughly $5 to $6 million a year. And the bulk of those diversions would have gone to our rural fire truck program. Our next speaker is going to talk about that, and Insurance Commissioner Cheney is going to also speak about it. We're pleased to have with us Brad Smith, who's a state fire coordinator, and he will discuss the importance of our rural fire truck program. Many of us who live in cities just don't realize how important a rural fire truck program is, but if you have a deer camp, or if you own 5 acres out in the country somewhere and you want to put a cabin on it, or you happen to live in a rural area, it is very important. That dictates the rates in your area, and it can make a huge swing on how much you pay for your insurance in a rural area. So we sure appreciate you being with us today, and tell us, if you would, the importance and the history on the rural fire truck program and the funding, and would you also please tell us how it's funded based on county participation versus state monies?
I can do that. And if y'all don't mind, I'm going to stand up here so for once in my life I can feel almost as tall as Joe Shoemaker. I think most of you probably know that the rural fire truck program started back in 1995. There have been off and on years that it has not been funded. You know, don't necessarily have to be funded every single year. What we're looking at on the piece of paper or the handout that I've fixed for you are the total number of applications that we've had over the life of the program. And that's 964. That's between the regular program, which is 1723-1, and the supplemental program, which was created, I believe, in 2007 under 1723-11. The supplemental program was created to allow a county or municipality, whichever the case may be, to pick up an additional grant if they had run out of all available ramps. So that just kind of gives you an idea of where we are on those and what's been applied for under each one. The total applications that we have paid to date, going down you'll see, are 923, for a total in state funding of $50,395,166 and some change. Good point to make right here, and I may be getting into Commissioner Cheney's presentation, I'm not sure. We've done studies over the past years that have shown the rural fire truck program, through lowering public protection classifications all across the state, saves Mississippi homeowners an average of $50 million a year. The state's contributed $50.3 million, or right at $50.4 million, since the beginning of the program for something that's saving $50 million a year. That's a pretty good return of investment, in my humble opinion. Looking down at the next one, applications with funding approved but not paid due to trucks pending delivery. We don't pay $70,000 or $90,000 portion until that truck has been received by the local jurisdiction. What has happened and what's causing us a little consternation right now is back in the day when all this first started, you ordered a fire truck, you could expect to receive that truck in anywhere from 180 to 210 days. That made it no problem to get your truck in within a fiscal year. What's happening now and has been happening for the past several years is trucks are taking 360 to over 400 days to arrive. So obviously you can't fit that within a fiscal year. So when we receive money from the legislature each year, what I do is I take that dollar amount and I put it up here, and every time an application is approved, the amount of that application comes off of that big number until we're down to where we can't fund another application. We've not partially funded anything. If we don't have the full amount to fund it, y'all get that money back at the end of the year. What's taken place, though, over the last couple of years or so is the money that we were appropriated and that we've obligated to the local jurisdictions for their truck. We go into the next fiscal year, we're not getting spending authority for all of those funds. We've got the money, but we can't spend it. So I'm saying within the next couple of months, maybe 3 months, we're going to have some counties and municipalities that fit into this 37 trucks that have been funded but not paid, who are going to ask about their money, and we're going to have to say we don't have it, we can't send it to them. So we'll have some unhappy campers unless the legislature can do something, come back and fix that. Looking ahead, if we can get through this, we feel like we've got a solution to prevent it from ever happening again. The application process is done in 3 parts. You submit the part 1 of the application that lets us know that you want to participate, what round you're on, who's going to get the fire truck, what kind of truck it's going to be. And you'll get a letter back after the committee has reviewed it. That's the commissioner, myself, Joe, and the director of the State Fire Academy, Terry Wages. You'll either get a letter back that states your application has been approved pending availability of funds, or your application has been approved, funds are available. Once we tell them funds are available, we've obligated that money to them. I mean, it's theirs as far as we're concerned. Then we send them part 2 of the application. They have 90 days after receipt of part 2 of the application to either go out for bid and cut a purchase order or purchase off state contract. Send all the part 2 back into us. What the part 2 does is it gives us a copy of the PO. It shows us their repayment schedule so that we can make sure they are matching money that we're going to send them with local funds and not state funds. That's critical. That first match has got to be done with local money. It can't be done with state money. What we're looking at doing, and so far we don't think we're going to have any problems with it, is rather than waiting until the truck comes in, we received the part 2 of the application back from them that shows they have in fact ordered the truck. We received a letter from the manufacturer to show us the VIN that will go along with that truck. We send them the check for them to hold in escrow until the truck comes in. That way, in the future, all the money will go out in the same fiscal year in which it's appropriated. And just to let you know how popular the program is, even though we didn't have a new round passed this past session, we have 12 applicants sitting over there that we do not have money for. So applications are a year-round process, whether the legislature passes a new round or not, because we still have counties that are back down in the lower ranks. We have some counties who will never use all of their available ranges. Because they're smaller and they don't have as many fire departments, they don't have as many fire stations. So, y'all would like to ask questions, I'm here.
Mr. Blackwell?
You may have covered this, I might have missed it, but you said it used to take you about 180 days, so 6 months to get a fire truck. Now it's over a year. So what's the holdup there?
Trucks are a lot more complicated than they were back in the earlier days.
So it's
They have
manufacturing.
A lot more electronics, a lot more computers, EPA came in, now, you know, all your diesels have to have the, regen systems put in. That added about 20 to 25 grand to the cost of the truck. Of course, here recently, we had the little virus thing that came through, and that kind of messed up the assembly lines and such, so.
Can you tell us how much a truck costs? Average?
We see some of the trucks coming in at around 260. I'm gonna say the average is gonna be around 280. We just had one come through the other day that was 455. 455,000. It really varies on whether or not they get a commercial chassis truck or whether they get a custom or what they may want an aerial. You start looking at an aerial truck, you're $1 million up.
Thank you, Mr. Chairman. Now, most of these fire trucks, are they brand new or are they refurbished? They're bought?
Brand new. We don't, if it's not brand new, it doesn't qualify. The closest they can get to something like that is they are allowed to purchase a demo truck. The reason they can purchase that is because the way DFA looks at it is if it has not been titled to someone, it's new.
I have a question. If there were an annual funding source for the rural fire trucks and we wanted the counties to participate, what would you see as a fair mix of county funds and state funds and something that's affordable per truck that a county would be able to afford?
Right now, if you look at, when this thing first started, you could buy a truck for $100,000 to $110,000. State's part was 50, the county's part was 50. So, it's kind of a 50-50 match back in those days. Now, depending on what round you're on, it's either $70,000 or $90,000 from the state. And with the average price of the truck being $280,000, you can see who's picking up the lion's share, you know, cost of the truck. The part that concerns me about, and I've talked about this with the commissioner, the part that concerns me about increasing the state share is we have counties and small municipalities out there right now who desperately need a fire truck, but they can't come up with a local match. They can't meet that $70,000 or $90,000 local match. It's kind of a double-edged sword. Your more wealthy counties, the higher you pick the match up, the more it helps them. Also, you know, the smaller counties.
What about, have you seen ratings improvements based on one fire truck on the rates?
Sure.
Commissioner probably can speak to the specifics of how many levels it could improve the rating.
The truck is either going to do one of two things. You know, counties and municipalities don't go out and buy a $280,000 fire truck just because they want it. It's either going to maintain the rating that they've worked hard to get, or it's going to lower the rating where they work, depending on what they're replacing. And in many cases, it may be they're fixing a new grading district or a legal fire district, you know, expanding a district, and they have to build an additional station. A whole multitude of things that could cause them to have to pick up another apparatus.
Other question, committee members? Brad, thank you so much for your knowledge today. We've been joined by Lieutenant Governor Hoseman. He kind of slipped in over there without me seeing him. Would you like to address the committee or ask any questions?
First, thank y'all, thank everybody, all of you. Commissioner Cheney here, Secretary, you here? There he is. I know he's gonna be real long, so I'll probably slip out. I love you, Mike, from my home county. Something that was interesting to me that y'all were just discussing, I don't think you really touched on it in depth. The construction requirements now, the houses has changed significantly, if I understand correctly. So now the possibility of total devastation of the home is reduced significantly, either by building up or also the type of construction that's going on. So when you go to look at the insurance coverage right now, we're not trying to insure for 100% loss for homes, even in a Katrina event. Is that correct?
Well, during Katrina, normally what you do, Mr. Shoemaker will tell you this, if it's wind insurance, you will buy a policy, let's say it's a $100,000 house, that policy will cost you about $1,200, and you have a 2% name storm deductible. In other words, you take 2% off, or you can buy a 5% name storm, you cover the first 5% of the home. On fire insurance, and et cetera, for a home, your question is, I want to be certain I understand what the rates do up and down.
No, really what it is how funded are we? How much, we have $300 million in here according to Tom Walker's calculation, we have $300 million in here.
Oh, okay.
And of that $300 million, we're reinsuring $500 million worth of losses, and then you've got another $170 million, Joe is just going over his chart, which is real accurate, real helpful.
I got some.
25 million, and it goes down to where we're insuring $770 million. Now, we have the total insurance amount of coverage that we have for the 14,000 houses is about 16, 17, 20 million, something in that range.
3.4.
So, if in a devastating event, how much insurance do we need? How much does our coverage need to be?
During Katrina, we had a loss of about 40% of the homeowners that were actually insured by the wind pool in 2005. Those dollars were about $700 million that we had to pay out for $1.8 billion in coverage. That $1.8 billion we call TIV, total insured value. So we paid out $700 million. The wind pool had reinsurance to the tune of about $150. We assessed the member companies $545 million.
I got all that, Mike, but look, right now, if we needed 40% coverage, it's going back to what the question is, how much insurance coverage do we have right now?
The reinsurance that we bought this year, the winter did, not me.
How much are we insured, how much is our insurance for? Are those $14,000, $16,000 homes averaging I think you said 165,000. How much insurance coverage do we have outstanding? 2.4 billion. So 40% of that, if we were going to do 40% of that, would be about 900 million.
Right.
Right, so under the scenarios that we're on right now, though, the house construction has changed significantly. Because
I got your question. I understand that.
So how much do we really need? Do we need 300, do we need 600, do we need 150? I mean, where are you now with insurance? Even in a devastating event, we're not gonna have 40% losses anymore because our construction is so much better. So when we had all these discussions before, the committee was wondering, how much do you need in that fund? Because we sure don't wanna have it underfunded. And my coast delegation is real important to them. So where are you?
So here's the question. If you had a Katrina today, what would be your losses compared to 2005? 3 or 4 things about it. You build a stronger house, you're building out of the floodplain, with the building code passed in 2006.
Building 18 feet high.
Less and less people live between the railroad track and the beach, so you don't have the coverage. That's really where our problem is in the winter. So your loss today, the probable maximum loss, and that's what we have between the department and the wind pool is you're buying too much reinsurance, or you're not taking enough of the first tier to cover everything, which means that you keep needing more and more money to buy reinsurance. And we've got a slide on that. So to answer your question, the wind pool is adequate on surplus today. I think they're fine on surplus. They may not agree with me, but we think they're very fine. Chief Examiner David Browning is here. He could tell you, he doesn't have to agree with me. He's my chief. He's the guy that determines solvency. You think 300 million is adequate, David? I think so. So we think we're covered on the thing. So the question is, if you had a Katrina or you had a Category 4 like Laura that just hit Texas, what would be your loss on the Gulf Coast? We think it would be somewhere around 600 to 700 million. I didn't have time.
600 to 700 million would be our insurer would have about a $600 million loss, of which we've covered 770 million at this point. So we have coverage in excess of what is the probable loss would be. So the reason that's important, I think, and what Senator Michelle was talking about is we continue to put in 3% per year in surplus lines. We've now heard from fire truck people that they're short on fire trucks that are very expensive now, much more than they used to be. So that's why I guess the diversion was going on when we started this.
When I do this presentation, it's all in here, and I won't cover every slide in here, but the slides are in here on comparing our wind pool, say, to Alabama, how much we've spent over 10 years versus what Alabama spent, what the TIV in our state is versus Alabama, and only for some of the slides that Joe has shown you, and you'll get a pretty good grasp of where we are.
I defer to you, Mike, and I appreciate that. The only question I have is because the construction has changed so dramatically down there, what was really, how much money do we need to have in the wind pool, and do we need to put more money in there, or is it adequately funded?
Oh, they're adequate, they don't need more money, that's my opinion.
Then I will look forward to the presentation. Thank you, Mr. Chairman, that's all I have.
Mister?
Thank you, Governor, and Mr. Chairman, and members of the committee, and the guests. I will try to be very brief and go 15 minutes. I want to talk about the Rural Fire Truck Program very briefly. The Rural Fire Truck Program will enable a district within a county to lower their rating. If you're a Class 5 in the city of Jackson, have a $100,000 house, you pay $600. You move out into the county, you're a Class 8, you go to $1,200. If you move way out past Utica and Hinds County, you become a Class 10, $2,400. So not only does a rural fire truck save you lives and property, it saves you about 50% increase on your insurance every time you change the rating. The ratings are determined by the Rating Bureau. The Rating Bureau is Mr. Joe Shoemaker, who's here, and they have worked with us to keep rates from going up when we don't have rural fire trucks. Very briefly on what Brad talked about on the $3.5 million we have in reserve, DFA tells us that they think that we can give that money out because they don't audit the department on the $3.5 million. I'm going to gamble and send it to the counties, although it's questionable. It depends on who you talk, whether we have authority to do that or not. But if you commit to the boards of supervisors to give them the dollars that are due them for a rural fire truck, we certainly need to fulfill that obligation. So very quickly, I think it's the right slide. The Mississippi Wind Underwriting Association was established in '87. I'm recapping a little of what Tom Qualka said. Effective in '87, it began providing coverage for homeowners, and then it was changed in 2007 to again. All of this is on a slide presentation, so I'm going to go rather fast on this. HB 1500 passed in 2007, actually designed in the Senate. House won the corn toss, and it became a House bill instead of a Senate bill. We exempted at that time self-insurers, which is workers' comp, and medical malpractice from being assessed in case there was a shortfall. The assessment at that time was placed on policyholders, and it's important to understand that every policyholder in this state would be assessed if there were a shortfall after a hurricane event. I personally did not agree with that, but we were told that was the only way we would keep companies in the state of Mississippi. We've been able to change that later on, and you'll see some of the slides on this. So a lot of this has already been gone over. we're just heating this time up. I love it. In 2014, we passed the Senate bill, and it exempted the policies or portions thereof from residential earthquakes, and you can go down and read all of this. And he had a repealer of 2018, and in 2018 we passed Senate Bill 2467. It removed the repealer again and extended everything out to 2019, where we got fees for the rural fire trucks. In negotiating with the lieutenant governor at that time, he said, I would give you more than what you request on the fire trucks if you would agree to let me have $1.5 million. And I said, Governor, I'm not in the driver's seat. You are. You tell me what you're willing to give me. And so that's how we ended up with $4.5 million on the conference report. HB 444 that came about in 2019. It changed the definition of essential property insurance to allow MUW to issue policies with replacement cost value. And all of this basically is this. If you had a 5% named storm policy out of the wind pool and you had a storm, chances are you got zero to replace your roof. Zero. Senator Kirby's aware of that because he and I have talked about it more than once. So we've got it to where you can at least get some money back on replacement cost value. That's RCV versus ACV. ACV is actual cost value when you replace a roof. State Farm guys know exactly what I'm talking about. They have to live with this every day. So we've got the wind pool where they're on board with what the industry does. So you got to account for non-recoupable assessments. We also now assess the member companies, not the policyholders in this state. If you have an event, a shortfall, you will assess the companies, not the policyholders in this state. And the rest of it, you can read that. All of this is fairly simple. We got $3.5 million of monies, again, for the rural fire truck program, and those are the dollars we haven't dispersed that are in question today as to whether or not we have the authority to disperse those dollars. This is a chart that if you have the handout, you can look at it. And, I think there's a way to show this, but on the far top right corner, if you look up there, you can see the reinsurance that's been ceded since 2007. That means how much reinsurance that has actually been purchased by the wind pool. And then you come on down to the bottom line, down at the bottom, Governor, and you'll see the total surplus and where that surplus came from. If you really look at this slide, it's going to become apparent to you that the state of Mississippi has put in $180 million of the surplus that's there today, and the balance of it has come from non-admitted policy fees, which is about $120 million. And the purpose of HB 1500, you have to remember, specifically was to purchase reinsurance. It was not to affect fees, it was to purchase reinsurance, not to affect fees. So when Mr. Burkhalter, who is the actuary for the wind pool, goes out and figures what's needed for the wind pool on rates, he does not include the fees that are collected on non-admitted companies. And he's shaking his head, yes, he agrees with this. Those fees are not included with the new rate calculations. That's important to know in the next few slides I'm going to show you. Okay, going on forward, if you look at Mississippi versus Alabama, top right-hand corner. Everybody on that, it's page 12. The written premium in 2019 for Mississippi is about $29 million. Alabama's $24 million. Reinsurance premium ceded. This is what we paid for reinsurance in Mississippi was $23 million. Alabama paid $10.7 million. The limits on total insured value in Mississippi were $2.8 billion, and the limits in Alabama were $5.1 billion. We're going to come back to this again in just a couple of minutes. And the bottom part of this are just the tiers or the layers. In other words, your first tier is when you have a storm, maybe $100 million. So of the first $100 million in loss, the wind pool would cover, say, $53 million of it, or a portion of it, and reinsurance would cover the other portion. And all of this sounds like Greek to you, but let me assure you, it's complicated sometimes. So this is the retention history of the Mississippi Wind Underwriting Association on solvency. Notice that in 2007, the the wind pool retained 100 million. In other words, they covered the first 100 million in loss, and they had 35 million in surplus. Move on down to 2015, 16, and 17, where you had over 200 million in surplus, and they were only covering 52 or 53 million out of that surplus. And they had a pretty good argument. The board, and we've had a pretty good argument about it. The board thinks that if you had another event, that they need to be prepared, and they didn't want to pay out all of their surplus. So to keep it really complicated, if you think of it like this, that the rate online, that's what it cost you to buy $100 million in 2015, was 14.9%. You paid $14,900,000 to get $100,000 in coverage. To me, in my mind, it would say that you need to use part of your surplus to cover the first $100 million instead of buying reinsurance. And if you don't have a storm, you made 14.9. If you had a storm, you're going to spend it anyway. So we worked all of this out, and the first year that we passed in 2017, I think we saved $14.8 million was about the right number, depending upon the tiers that you add up. But anyway, HB 444 was a revisions to HB 1500, and basically what this did was establish a minimum reserve, and the MUW reinsurance retention requirements must be approved by the commissioner. And what we were trying to do is to be certain that the board was retaining enough coverage and buying enough reinsurance so we could cover all of the losses if we had any. And the board went along with us on this, and the rest of it's just not important. The admitted insurance companies, we've been over this before. They're subject to our laws. They pay a 3% tax. They bring in about $250 million a year to the revenues for the state of Mississippi. And an admitted company pays into a guarantee fund. So if there is a loss by an admitted company, they're insolvent, can't pay, then the guarantee fund would be certain that they were paid. And I think the limits on the guarantee fund's $250 million. Is that right? Yes. I had to look at my chief deputy of the legal band. So it's $250 million on the guarantee fund that you would pay out. And we have authors here with us on the guarantee fund, so he understands what we're talking about. The non-admitted companies, we do not regulate. We do not set rates. We have very little regulation over a non-admitted company. They are called surplus lines. An example of a surplus lines would be that Nationwide owns a company called Scottsdale, which writes a lot of insurance on the coast. And by the way, Scottsdale just raised their rates 32%, surplus lines. You heard Joe tell you that was going to happen. And we're already getting complaints on that. So a non-admitted company does not have to follow the same criteria for underwriting or rate setting that an admitted company does. Any questions on this part? So of the fees that are collected, non-admitted fees collected in this state, 58+% of those fees are collected north of the lower 6 counties. So we've given you a history. When we collect the fees, it used to be at 4% plus the 5% we had after Katrina. It was collected by the Mississippi Stamping Operation. We call it MSLA, Mississippi Surplus Lines Association. They get 1/4% points for collecting that fee. And the courts ruled in 2010 that that money belongs to the state of Mississippi. Immediately the next year, when I couldn't get funding for the rural fire trucks, I took it away from Mr. Quacko over here, who happened to be on the board. And that's how we funded the rural fire trucks that year. Today, this board has about $5 or $6 million in surplus on hand. There's some money there. All you got to do is write a letter. It doesn't take me. Somebody has to write a letter to get the money for it. And there is going to be some negotiations that have to go on between what fee should they charge to collect the monies for the wind pool. The wind pool has been having to pay Joe $450,000 a year, $425,000 a year. That's way too high for what they do. So somewhere we've got to reach a happy medium. The law allows the commissioner to determine that if we don't like what MSLA does, we can let the tax commission or somebody else collect that fee at a lot less dollars. Actually, we probably could hire a CPA, pay him $100,000 a year, and he could do the whole thing. And we may end up having to do that within house. I don't know. We just don't think it's a fair deal to charge $450,000 or $425,000 to collect the fee for the wind boom. So that's important to understand because most of it's about money. People ask, where do these dollars come from? This slide will show you that 58.95% of the fees collected on non-admitted fees are collected outside of the lower 6 counties. Slides there, it's pretty self-explanatory. These are the summaries of the funds received by NWUA, the wind pool. It starts with the funds received from the legislature, community development block grants under Haley Barbour, and the non-admitted policy fees that they have collected, net of what we took after we took the money for the rural fire truck programs twice. This is the non-admitted fee history. Mr. Qualcomm told you it started out at 5% when Dodd-Frank Act was passed in 2012. 2 minutes left. We were able to come back in and get the legislature to work with us. We cut the fee from 5% on property and casualty and liability to 3% across the board, which we actually gave a cut. That was a fair deal. The money stayed about even. Rate indicators, this is the 2 minutes I really don't want to talk about. This is Mr. Burkhalter's slide. Without any surplus line fee income, and this is kind of nebulous here, they're asking for a rate, they would ask for a rate increase of 25.2. So you can see what would happen as you take the surplus lines fees with rates. Remember, they've always told us that surplus lines fees do not affect rates. They are used to buy reinsurance. So this is a rate history. And when you've got a good wind pool board, let me tell you, the blue is the indicated rate increase that was needed after Katrina of 365%. They were granted 127% in 2008. The wind pool agreed with us to lower the rates 14.2% in 2013, and we went up 3.4%. Most of that's south of I-10. We had to do that, and the bottom line is there has been no rate change on the Gulf Coast of any significance since 2008. 12 years. 12 years out of the wind pool. And if you build a house to standards, they get out of the wind pool and go to an admitted company real quick. So the rate history is here. It's just another slide of rate history. Someone has asked me about the slide here from Mississippi and Alabama. What's the difference in the TIV? We've looked at it. A lot of the factors, the value of the wind pool in Alabama, 43% in Mobile County. And they have a higher valuation on homes, and often those policies that they write in Alabama, like ours, they may have more than one property covered. That's the difference in the coverage. Now, I didn't talk about treaty reinsurance, which is where you buy for one-time occurrence, versus DNF, which is facultated, which means that you also are covered in case of a second event. And that's the simplest way to explain it. So reinsurance is complicated enough. Back in 2011, Haley Barbour said, we can't continue doing what we're doing. This is a cartoon that Marshall Ramsey drew. Dry swimming pool, and this is a copy of the editorial. I didn't copy the whole thing, but thought you'd be interested. It's not just us saying maybe we need to look at this a little different. Other possible items that you may want to look at, the Texas Morales case says, the Fifth Circuit has looked at it. It simply says that those surplus fees belong to the Texas Wind Pool Association, and that's the basis for, I think it would be hard legislatively to get your hands on the surplus that exists at the wind pool. I just don't think legally you would have a chance of getting the money. Where does the surplus belong? Who's it belong to? It belongs to the wind pool, the commissions to the agents. This has been a bone of contention. Initially, they paid 15% when the market was at 10%. We had people that had a policy with an admitted company. Let's say that they were getting $150 in premium and they got a $15 commission. They might can move them to the wind pool. And when they moved to the wind pool, that consumer paid $2,000 for wind insurance, and the commission to that agent ended up being $300. When I became commissioner, I was told about that, and I said, I don't want to even get it there. I'm not going there. But I want you to know the wind pool, at our suggestion, and thanks to some of the people in the room, lowered that commission from 15% to 12% on new buildings and kept it at 10% for renewals. Right, Joe? Right. So you kind of know where we are. I didn't get into the First Responder Act. 1 minute over, Mr. Chairman.
Thank you. Questions? Dr. Hill, speak into the microphone, please, Cynthia.
If you go back to page 12 and look at the reinsurance premium in Mississippi versus Alabama, can you explain to me why Mississippi's premium, and I'm no expert on this, trust me, is more than twice what Alabama's premium is?
Some of it's due to the fact that Alabama allows you to have a named storm deductible too. That's part of it. And Mr. Shoemaker and David Brown and I have had more than one conversation about this in the last 2 weeks, and he may be more qualified than I am to answer that. You want to answer it, Joe?
Are they just better shoppers? That would be my question.
No, it has to do with how the policies are written in Alabama. If you look at the total purchase by the wind pool on reinsurance over the period of 2006 through 2019 or 20, it's about $700 million of reinsurance that was purchased. If you compare that to Alabama purchased, and there's slides in here, during that same period of time, a little over $200 million. There's a difference of almost $500 million more spent in Mississippi. There's some reasons for it. We have 95 or 90 miles of beach in round numbers. Mobile, with Baldwin and Mobile County, has a bay and a very narrow amount of land where a hurricane could hit. And the homeowners in Alabama can reinsure at a lower replacement cost than we can in Mississippi. Scott, you got anything to? Now, Scott Lemon's here. He's chairman of the board, so I will tell you, he is one fine guy too. He and Joe Shoemaker run a good outfit. Let me just say that if you were in Mr. Shoemaker's shoes, you have 11 bosses, plus the department you have to answer to. He may have the hardest job of anybody in the room. So I can tell you, it's not an easy fix to run those things. To answer your question, Senator Hill?
I don't know.
McClendon?
Jury's still out on that. I don't quite understand it yet.
Thank you, Mr. Chairman. Mr. Commissioner, are all admitted carriers required to write in all 82 counties, or do they get to pick and choose?
Admitted carriers can write where they want to. You know, our job is to try to recruit people to write on the coast. And Senator Hill asked a question a while ago about rates. Rates have not gone up that much on the Gulf Coast. We did the Clarity Act. Person that's presently a senator now was in the House that promoted that. We fought it for a couple of years, not because we didn't want to do the Clarity Act. We wanted it to be accurate when we did the Clarity Act. It said basically that a guy or a lady that bought a policy in Gulfport was not being subsidized by someone in Lee County or Tishomingo or DeSoto. And the people in DeSoto County were not subsidizing the coast. It was just that simple. That proved to be the case, and we did leave out the admitted fees. And the reason for that is the board had told us unequivocally that admitted fees had never been used to determine rates on the Gulf Coast, and we left them out. And it was it's a pretty fair assessment. We've got one ongoing now for the final 3-year term that we had to run the Clarity Act, and that will come out when, David? Be early part of next year. It takes us, we're almost 12 months behind to get the premium basis and to get it all divided out. It's a lot of work to do one of these things, but by and large, the premiums are even on the Gulf Coast. The Gulf Coast we've had a good deal, and intentionally, Governor Barber and Gulf Coast delegation, you know, I've got a son-in-law from there, so I'm a little partial to the coast, has had a pretty good deal. We tried to keep rates low for them to recover, and they have.
So do those admitted carriers that don't write on the coast, are they charged surcharge or fee at all?
You mean an admitted carrier charge a surcharge? I've never heard of one. Oh. Actually, the people who just testified have had 11.1% decrease or somewhere in that category in the last year in homeowners. That's not automobile, that's just homeowners.
No, my question was, do the carriers that don't write on the coast, are they charged any kind of assessment for not writing there.
All right, so what you're talking about, if you write on the coast, as an example in Mr. Shoemaker's slide, you would write yourself out of the assessment. Since I will not name companies, but ABC Company, who did not write on the coast during Katrina, was assessed $43.4 million after Katrina to cover the shortfall of the $540 million. XYZ Company, who wrote a lot on the Gulf Coast, was assessed $13 million. You see the rub? So some of those companies wanted to sue. The courts ruled you couldn't. One company did sue. And then just to bring it forward, statute of limitations is gone. We settled the Arrowwood case, so they're all settled. Now I've got Jim Hood sued all 13 people that actually wrote on the Gulf Coast for not paying claims and shifting them to the flood program. You with me so far? For over $1 billion. We've asked the Attorney General to try to settle those cases, and we're at loggerheads about that. And I will tell you that I told them yesterday, I might as well make it public. If they don't have some progress, I'm going to intervene and sue them. I'm going to sue the Attorney General of the state of Mississippi. I think it's wrong to do this or what they're doing. It's a bad deal. And it affects everybody in this room with rate increases. So the bottom line is that we try to make the playing field fair all the way across.
Okay, Senator Delano and then Senator Wiggins.
Commissioner, what impact on the insurance markets would removing the 3% surplus lines tax have for the competition between surplus lines and admitted carriers in our state?
Senator Delano, it would be catastrophic for the market because it would repopulate the non-admitted carriers, and it could, although they've had an increase, it could repopulate, in addition, the wind boom. What happens after an event, the surplus lines carriers will move out of the state and come back when the market stabilizes. So they have about 11% to 14%, depending on who you look at, of the wind policies in the lower three counties. 50% of those are written by one carrier. Am I not right, Joe? About 50%. And so I took the liberty of putting the company, I should say, that put the most people into the wind pool, putting them on the board to let them see what they're doing. So it would be catastrophic to take the 3% off. That's just my opinion.
Okay, Mr. Commissioner, I just want to make sure that the committee members understand that while we're talking about a lot of windstorm, you are really and truly, surplus lines is on a lot of different types of policies, not just wind coverage, but in the chart that you show where a majority of the fees that are the surplus lines fees that are collected are outside of the 6 coastal counties is a testament to the fact that those policies and those fees that are collected are for policies that could be for specialty equipment that's in manufacturing or in hospitals or wherever there's not an admitted carrier that's available to provide that policy. Is that right?
Not correct, not totally right, but you've got a good point. A lot of the surplus lines fees come from casinos. We were very aware of that in 2012 when we said they don't need to be paying more. It would be a 2% tax on them. It wouldn't be fair. And Mr. Qualcomm may want to answer that question on surplus lines. I've got an opinion on it. It may not be what you want to hear, though. But it's fair. The surplus lines people on the coast, basically, if you have a home that's worth more than $250,000, the surplus lines people would normally write that. Wouldn't I be right, Scott? That's about who writes it. And the admitted carriers in Mississippi write a lower value home versus what the surplus lines people would do.
So you are in agreement that the surplus lines tax, the 3% tax that we collect, it is a must to keep the markets stabilized, correct?
I think it needs to be kept and not go away in another 2 years. Number two, we changed the law last year before last, to allow those fees to be used for something other than buying reinsurance. That's in the handout, that you can use it for a lot of things. Let me give you an example. Tradition in Harrison County. is in dire need of a fire station out by William Carey. There's going to be a nursing home built there that will cover 100+ people. I can't tell you who's going to build it. I don't think they've disclosed it yet. They need a fire truck and they need a station. If the legislature saw fit, and I've got a letter from the Board of Supervisors in Hancock County, you might contribute some of those fees towards building a fire station and buying a truck. It's economic development. Why do you need it there? You've got about 3,000 homes that have moved north of I-10 and moved into this area to get out of harm's way. And that's what the governor was talking about. So it would help you all out.
Thank you, Mr. Chairman. Not being on the committee without me. I actually had a comment, but hoping maybe the commissioner can maybe weigh in on it. But during the exchange between the lieutenant governor and the commissioner, I think one factor wasn't discussed that's important for the committee is that the population increase that's going on down where we are, and actually, and the lieutenant governor would probably actually have this number better, but the preliminary numbers are showing that of the 7 places, there's basically 7 places in the state that are growing, and Harrison County in particular is the highest growing county by 20%. I think that's right. So the coast is growing, and I would say that because of the things that have been done, that's a factor in this. Pearl River County's growing. So in the exchange, I didn't want that to be lost, because I think that what we are seeing, and I will speak for my district, in my district, there is residential homes going up, particularly outside of the city limits of Ocean Springs, that are going, and there's more stuff going on. So my point is, the population increase, to look down the road, that whatever the committee is doing, that we recognize that that population, based on the census that's coming out, is showing an increase, and we're having more residential homes being built. We're having, which are also, to your point about higher quality standards, but we don't want to, whatever's going to be decided, we don't want to not recognize that. So if there's a comment to be had, I'd be, please do that. Oh, and Commissioner, you had said less people between the railroad and the beach, I think is what was said. What actually, anecdotally, what I've seen is people are actually moving back down. In fact, my next door neighbor built a house. He moved back down from Hurley back into my area. So the point is that I think those numbers are there, but what we are seeing, particularly in Harrison County, is a 20% growth from 10 years ago, which Katrina was 15 years, and that's something that I think needs to be considered and addressed. Thank you, Mr. Chairman.
Most of that growth is occurring north of in Jackson County too. A lot of
it's up in the St. Martin area, that's correct, but there's also, but I'm telling you, like in my area, which is south of I-10, south of Highway 90 in Ocean Springs, there's houses going up everywhere, south of the new school, of the high school. So I think, yes, there is north of I-10, but there, as Senator Hill said, in Pearl River County, there's people coming in, my assumption is from the New Orleans area or from that area. So there's growth that's going on, and that growth needs to continue, and whatever the legislature and the committee does, that has to be considered.
The point I would make is that the fees, the non-admitted fees are not needed to keep the rates where they are. And I left this slide out, but you do need to know this. The wind pool is asked for a rate increase, and the indicator was 27%. And they have asked for an increase of about 15%, and we're probably going to grant it effective in April of next year. That's when the request has been made for. It's a fair request. It wouldn't matter whether they kept the fees or not in that case, but it might help them if they had an event. I don't think that's a big deal. The deal is they need to be rate adequate, and if we don't raise the rates, you're not going to get the admitted market back. Let me tell you, when I took this office, there were less than 12 people writing on the Gulf Coast. Today, we've got over close to 100 people that can write on the Gulf Coast. And that's because we have actively gone out and recruited and asked people to come and write on the Gulf, little bitty pieces of the market. one major carrier that had over 30% of the market dropped down to almost 2021. They're back up in the market, but it shows you the market on the Gulf Coast is extremely competitive. If the rates go up in the wind pool, we believe that at least 4 admitted carriers will start writing wind at less or very close to what the wind pool is writing now, and take some of that load out of the wind pool. We're losing about 200, 250 policies a month. Is that right, Joe?
We're about 14%.
Yeah, 14% down. So the more you can depopulate that wind pool, the less need you have to try to keep fees to build surplus or buy more reinsurance. And look, reinsurance is doubling. With all the things we see in the world today, and we didn't talk about a lot of the underlying factors, time doesn't allow us to do that, but we're going to see some real shaking in the market. It will not affect Mississippi like it will Louisiana and Florida. Thank you, Senator Wiggins.
Any other questions? Governor, you have a question?
Yeah, I thank y'all.
Governor, I can't believe you had to sit and listen to me this long. I'm sorry. We appreciate you.
It's very informative, I think, for the Senate. And priority from the senators in the discussion with me was that we make sure that the coast is covered, are properly covered in the insurance process. So this is very informative to learn all of this. We appreciate everybody's help, all of y'all, Chris, all your good work, projections, all of y'all, and your work over the last 15 to 20 years to get it like that. It just didn't get to a surplus by itself. Y'all all work hard on it. Mr. Chairman, thank you very much.
I did talk to the speaker late yesterday afternoon, and he has a rep here. I'm not sure who it is. Somebody's here from the speaker's office. Yeah, he's here. So they are privy to what we're saying also. Thank you, Mr. Chairman. There's no any further questions.
Thank you, Commissioner. I also want to thank our Brittany Davis, who did, and Janet Trotter, who helped us greatly on pulling this event together. We had a wonderful presentation. I want to thank all the presenters. The committee will meet again tomorrow morning at 9 o'clock to discuss workers' compensation insurance. We stand adjourned.
Well, Mr. Chairman, before we leave, this was really a discussion about what impact the surplus lines has on the revenue for the wind pool board. But I don't remember I heard anything that said, gave us a percentage of the wind pools or the Windstorm Underwriters Association's revenues that are derived from the surplus lines tax. Isn't that about 15 to 17% of their total revenue?
Senator, if you look back, I have to go back and look at the slide, but there is one slide I did go over very quickly and skip to show the revenue. And at 13, our premium certainly has gone down as we've gone down. I mean, we were up at 85, 80 at one time now. We anticipate 2020 to probably be around 27 to 28 million. So depending on how much funds we get, depending on, if we got all of it at 13, it would be 13 as compared to 28, that would be percent.
So if we end up reducing the total amount of dollars that are contributed to the wind pool revenues from surplus lines tax, what impact would that have on the premium costs for the taxpayers that are in the policyholders that are in the plan?
I think that slide that he shows what the indication was at 27%, and for every dollar you add of outside money, or did I say outside non-policyholder money, you can see that chart goes down.
So is this, I just want to make sure that this is the rate history? Is this the one? Here we go. This one right here? So if we reduce surface lines income from the plan, then by, let's see, by $3 million, it would be, we should expect a premium increase in excess of 11.3%. Right.
And as you add the fundamental needs, you see that go down. The thing I would point is that you talk about premiums and rates, you want some stability. And you also want to be able to have, you can't base it on something that, whether you get it 1 year, 2 years, part You're helping them more to use it for provide stable versus roller coaster rates of it.
Yeah, thank you. Mr. Chairman, I want to thank you very much for allowing us to sit in and ask questions today. Thank you very much.
Thank you. We stand adjourned.